Wonderful. Very warm welcome to you, wherever you are in the world. I hope the weather's better where you are than it is here, but I'm not complaining because it's watering the garden, so I'm delighted. You would think we'd rehearse this, but I actually have, well, I'm going to go to the VIX in a minute. Perhaps what I'd like to start with is oil. Just going to move the chat box out of the way. Hope you can all hear me loud and clear. Hope we're not going to have the same problems as last week, or early in the week, rather. And if you have any questions, just drop them in the chat box and we'll be happy to answer them there. So I'm just going to move the chat box out of the way. We're just on oil, as I say. This is the WTI contract. Just tidy these up a bit. And first of all, what I'm going to say is that obviously the relationship between the CAD yen, we'll go back onto Anna's screen in a moment, but clearly it is defined to some extent, certainly from risk, but it's also defined by what is going on in terms of this major commodity. And as you can see at the moment, as Anna said, it's cratering. It is a very, very straightforward trade. It also makes the point that really it doesn't matter what's at the top of the chart, whatever instrument you're trading, whether you're trading a future, a spot, whatever it may be, the principle's the same. We've got multiple time frames. So I've got 2 minute, I've got 5 minute, and I've got 10 minutes strung across the top. Down at the bottom, I've got 15 minute, I've got 30 minute, and I've got the daily chart over here on the right-hand side. Just pull it down a bit. The things to note, clearly, we've got the trend monitor running, and it's red throughout. And I cannot stress it too strongly. The trend monitor is just a wonderful indicator to help you to stay in through a position once you have a profit in it. It's even more powerful used in a multiple array such as this, because whilst you might get oscillations in the very faster time frames down at this end, it's only once that starts to ripple through to your slower time frames, and when I use the term slower, that could be a minute. If you're on a 15-second chart, it could be 5 minutes. If you're on a minute chart, it could be an hour. If you're on a 10-minute chart, and so on and so forth. So time is relative. But as the trend pauses, if you're going to get a full-blown reversal in trend, then it's going to start at the fastest time frame that you have, and it's gradually going to ripple through into your slower time frames. And what the trend monitor does, not only in one time frame, but more powerfully across multiple time frames, is it smooths that out for you. And what that means is that if you see a transitional change coming on your faster time frame down here, for example, if we start to see perhaps this changing to a darker red, maybe, perhaps through to a darker blue. If we start to see that transitioning through here as well, and perhaps even a transition through into a brighter color, such as going from bright red to bright blue, then that is the precursor to possibly signaling the end of that particular trend. But it's the power of having it across the time horizons. And as you can see here, it's just bearish, bearish, bearish. There is nothing here at the moment from any perspective you care to look at it, whether you look at it from a volume perspective, whether you look at it from an indicator perspective. And what I've also done down the bottom here, and this is something that Anna uses a lot, and I've incorporated in my charts as well. This is the tick speedometer. And what the tick speedometer does, this is part of the tick speedometer, if you will. It's one aspect of the tick speedometer. Because what it was actually developed for was also to deliver the optimal tick settings. But the way we're using it here is actually on the time chart to give us a heads up in terms of tick activity from a participation perspective. So what we're looking at here is, in very simple terms, where you're in the red phases of price action, then tick activity is low. In other words, participation is low. What you're expecting to see there is, generally speaking, low tick activity and narrow spreads, which is pretty much what you got up here. You then start to see transition into orange. You've got a bit of a pick up in the activity. Then we move into these green phases. This is where we're starting to see a lot of participation. Activity is much higher. Tick count is much higher. You can see it's transitioned here to fast. If I pull up the whole thing, I'm not sure I can squeeze it all. There we go. So this is telling us the tick count if we were trading on tick charts to set those to for oil on a 2-minute time frame. And at the moment, we're running in fast mode. So what it's telling us is we've now got lots of tick activity coming into the market. And from a trading perspective, that's what we want to see. When we're trading in the red phase, then the market is sluggish. When we're trading in primarily orange and green, the market is active and lively. Now, what you can see, this is the 5-minute. Let's just pop this up full size. What are we seeing in terms of price action right now from a volume perspective? Well, first of all, the tick speedometer is giving us a heads up. We've got a big pickup in activity. We can see it here as well. So there's a lot going on here. What's interesting about this candle here is the narrow spread nature of the price action. Let's just pull it over a little bit. We've got a relatively narrow spread candle, and we've got not quite the highest volume, but certainly some decent volume under that candle. Now, comparing against what we've seen prior to that, if this were predominantly selling, then looking at the volume price relationship across the piece, what we'd expect to see is this candle to be much wider. In other words, this is an anomaly. And the expectation is that we're now starting to see some buying coming into the market, because if this were selling, this candle should have closed probably down here somewhere below 35.40, maybe down to 35.30. It hasn't. It's closed relatively narrow, and it's closed with a heap of volume under it. And that's what your expectation is, and that's the power of VPA. It is giving you that heads up as to what is like to happen next. Now, there'll be traders around the place going, oh my gosh, what do I do now? You know, I was nicely short, and now the profits are, you know, rapidly moving away. That is the power of VPA. It gives you that heads up. Now, if you're on the faster time frames, let's go down to, this is on the 2-minute. Here we go. We're now starting to see we've got a nice widespread up candle. We've got lots of volume under that candle. We've got lots of activity. So this market is now moving. It's going to move rapidly because we've got both participation. We've got volume in there, and we've got nice spread action to boot. The reversal is well underway. We'll have to wait and see how far it's going to go. I've actually got the volume clicked off, but let's just add that on there. There we go. We'll just close that. I've got that on bar close. I've got so much data coming in. Let's put it onto tick. There we go. And that'll then fill what we're seeing. Okay. So we've now got the volume coming in. That one's filled. That's okay. We've got decent volume under that one, and we've got a widespread candle. We've got good volume under this one, slightly narrow spread candle, but that's okay because the volume's fallen, but so has the price action. So everything's in agreement for the time being. Now we're waiting to see whether this is actually a full-blown reversal in this particular trend. In other words, going back to what I said earlier on, is the trend monitor going to transition into darker colors and ultimately move through, or is this simply a pause and reversal in the longer-term bearish trend for oil? And that's the question that VPA will answer for you, because what it then does is it gives you a heads up as to whether it is purely that, whether it's simply a primary into a secondary and then back into a primary of your initial trend. In other words, bearish, pullback reversal, re-establishment of the bearish trend, or are we looking at a full-blown primary to primary reversal? In other words, are we moving from bearish phase now into bullish phase? So it's a combination of using the indicators in association with volume price analysis to give you that heads up as to what is likely to happen next. Now moving down on, and that's obviously reflected hugely in the CAD yen amongst others, but certainly the CAD yen as one in particular. And if you like, the CAD yen is getting a double hit, it's getting a double whammy, because not only is it getting hit by the price of oil, it's also getting hit with the rise in risk sentiment. So if you like, it is one of the, if you're looking at the yen matrix, if you will, and you're trying to establish which pair is likely to be the strongest amongst that group, certainly the CAD yen would probably be the strongest, if not the strongest, for those reasons, because it's getting hit twice. We've seen it a lot, for example, in the pound yen pair, which is volatile anyway. But when that is being hit with Brexit, general elections or any political event, but particularly Brexit, we've seen it over the last couple of years, you get big volatility, not only from Brexit, but you also get the double whammy from the sentiment aspect of the yen being in that pair. So it's always something you've got to consider. Just going to pause there for a moment. I'm going to pull over the, we'll move over to the VIX.